Dylan and I discuss our tech leader crushes on this technology edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is Thursday, April 21st, 2016, and joining me in studio is the snappily dressed Mr. Dylan Lewis. Dylan, it's a Thursday, and we're in here.
Yeah, it's a little
talking
odd.
Tech.
I know. I thought you actually said the date wrong. At first, because we've done some times where we've pre-taped and you've caught yourself. You're like, oh no, I have to say, whatever Friday's date is. But no, we have flipped it up. We wanted to allow Tyler Crow to hang out with a friend in town.
It's absurd.
So we agreed to switch the Thursday Energy Show and the Friday Tech Show just this once.
Tyler, if you're listening, you got a lot of moxie.
Yeah.
Anyway, so we're shaking it up a little bit today, but I'm actually really excited. I don't have much in the way of notes. I don't think you do either. Just got some bullet points. We're going to talk about two tech leaders that we follow closely to see what they're up to, what we can learn from them, and more importantly, to just kind of glean what they think about the future of investing in technology. Dylan, since you're better dressed than me today, you got the snappy shoes on, I think.
Yeah, we had a meeting with one of our distribution partners for Fool.com, so I had to dress a little bit nicer than I usually do for the office.
You have the honors to start us off.
Oh, thank you.
Who are you talking about?
I'm going to be talking about Marc Andreessen. And, as you kind of prefaced here, these are people that we admire as investors. They're people that are incredibly innovative in the tech space, and they're really fun to follow. They generally tend to be ahead of the investing curve on some of the major trends. So that's why we're going to profile him today.
Awesome. So who is Marc Andreessen, and why is he awesome?
So quick bullet point resume for him. So he co-authored Mosaic, which was one of the early internet browsers and basically got ported over into Netscape, which I'm sure most early internet users were pretty familiar with. Netscape, of course, went on to be bought by AOL.
And destroyed by Microsoft and Internet Explorer.
Yes, and the infamous the browser wars.
It wasn't even a war. It was, we're going to block your browser on all of our operating systems. Have a nice day.
Yeah.
We're going to heavily promote our own browser, I suppose I should be more accurate by saying. But anyway.
It makes it tough to compete.
Yeah.
And then he later went on to launch the venture capital firm Andreessen Horowitz with his friend Ben Horowitz in 2009. They went from having about $300 million in capitalization to around $4 billion AUM in 6 years.
Is that by any chance mostly due to capital appreciation?
I'm sure there's some capital appreciation. I think it's also people voting with their dollars and realizing that they are doing one heck of a job and they want to get money with them. He has been, and his firm has been, an early investor in Facebook, Twitter, Pinterest, Oculus, Lyft, Airbnb, and Skype, just to name a few. And he currently sits on the board of Facebook, eBay, HP Enterprise, as well as a couple other smaller names.
Oh my gosh, I just realized this was the guy that got the big payday when Microsoft bought Skype.
Yep.
That just clicked for me. All right, cool.
He's had a couple big paydays.
Yeah.
But that was,
you're listing all these things. What's Airbnb valued at? Like $20 or $30 billion right now?
Insane amount of money.
Yeah.
Yeah. So I think one of the things I've wanted to do with him was profile something investors can learn from what he's done in the past, just a track record, and kind of an example of signals to pick up on in the marketplace. And so Andreessen Horowitz was an early investor in Groupon. A few months before their IPO, the firm participated in this kind of odd funding round that they'd had, and they contributed, I think it was $40 million to like just under $1 billion in total funding for that round. They had an initial investment with a basis around like $7.84 a share.
Okay.
Like that.
And this was back when, if my memory serves me correctly, Groupon was like the fastest growing company ever.
Absolutely exploding.
Yeah.
And it was one of those cases where like the popularity that they were experiencing was outpacing the business development and like the core fundamentals of like how are they going to make money and how is it all going to make sense and how is it going to be palatable to mainstream investors.
I distinctly remember reading an article in like Forbes or something. This is when they were operating out of like a warehouse in Chicago or something, and it was like of their size, Groupon was like the fastest growing in terms of revenues businesses on record. It was just blistering growth. So he obviously saw that. And
yes. and he got in, as many venture capitalists do. But shortly after the sale, so basically they wound up selling their shares immediately.
Right after the IPO.
Well, immediately after the lockup period on those private equity shares expired, and they were able to sell. So, a couple months after the IPO, they were able to liquidate their shares. And shortly after the sale, it was reported Mr. Andreessen was among several Groupon advisors who had urged the firm not to go through with its IPO as planned, basically believing that they should pull the IPO. There's going to be a lot of intense scrutiny on the business. It's not a business that people are very used to seeing yet, and the metrics aren't ones that people are familiar with. They're going to face a lot of the skepticism that a lot of internet companies do post .com boom and .com bust. And so
that's interesting. So if I'm reading what you just said correctly, they wanted Groupon to be able to show more cash flow. I mean,
Wall Street financials.
Yeah, Wall Street. That's what they wanted, and Andreessen just thought that Groupon wasn't there.
Yeah, which is actually kind of counter in a lot of ways. Like typically, you think about these VCs as cashing out as soon as they can because they just want to get their money out. They want to exit.
Right.
But like this is a situation where he felt like the business should not have gone public yet.
Right.
It's kind of odd little flip.
Yeah, it's like you don't want your money yet. Like what do you?
Yeah, I guess maybe he saw more potential there that they weren't realizing, or was worried that an unfavorable market reaction would hurt his ability to exit, and so that's why he was pushing them against that. But obviously, as an investor, when you see something like that happen, so they'd been public, I think, for about 5 or 6 months when they finally, when Andreessen Horowitz cashed out, you have to pump the brakes a little bit and kind of look at what is that signaling. This is someone who knows the tech space very well, someone who knows software companies incredibly well, and to no surprise, I mean, Groupon's down about 60% since they cashed out.
Unfortunately for Groupon and its shareholders, history has proven him right.
Yeah, absolutely. And I know some people might say, well, yeah, he sold some of his personal Facebook shares. He has a lot of personal Facebook shares in his portfolio in late 2015. And yes, that's true. But I think there are some differences here. The stock had appreciated 175% on the public markets when he made that sale. So wherever he bought in as a VC, he's doing even better than that. So he didn't totally liquidate his position. I think he sold about half of it. And some of the stock that he owned in that deal was actually tied to the Oculus acquisition.
Oh, yeah.
So because that was part of the financing for that deal. So not all of his Facebook shares were intentional shares, so to speak. And lastly, I mean, he still sits on the Facebook board.
Yeah, he's not leaving or anything.
Yeah. So I think that this Groupon example is just a really, really great example of signals that VCs can send to the market. And as an everyday investor, we don't have access to these early round funding meetings and what's going on behind closed doors. But when you see these kinds of things happening, you kind of have to question what's going on with some of these businesses.
Right. Yeah, and it's almost like let me ask you a question. If you found out that he was selling all of his shares in Facebook, how nervous would you be about Facebook?
I'd be a little nervous.
You would be?
Yeah. I mean, okay. I totally understand him, wanting to sell some of them and just enjoy some of them.
Well, yeah, I mean, I'd imagine that it was becoming an increasingly large percentage of his portfolio. So I was like, okay, diversification a little bit.
Yeah, and for him, I mean, he takes a lot of small bets. And,
as he should.
Him liquidating half his position in Facebook allows him to take very small positions in a whole bunch of VCs or in a whole bunch of VC placements that can then balloon up in growth. So it makes sense for his investing style.
Yeah.
But there's a reason that he still has a stake there.
Right.
And then with this focus on Andreessen, I think one of the things I also wanted to pivot to is just what is he looking at now?
Right. Which is actually what I'm super interested in. So.
Yeah. So he is very well known for this idea of software is eating the world. It's actually the credo of Andreessen Horowitz.
In a good way or a bad way?
He thinks it's a good way.
Okay.
I think if you're like a legacy manufacturer or something like that, you might hate it.
Okay.
But so it's the credo of Andreessen Horowitz. It's actually like their tagline on their site, and it shows in his investments. If you want a full sense of his thinking, he actually wrote an essay with that as the title, "Software is Eating the World." It's available on the Wall Street Journal. I think it published in 2011. I'm not going to rehash the whole thing here, but I think one little snippet here gives you a very good sense of how he feels and how he invests. And that's, my own theory is that we're in the middle of a dramatic and broad technological and economic shift in which software companies are poised to take over large swaths of the economy. Then he goes on to say, over the next 10 years, I expect many more industries to be disrupted by software, with new world-beating Silicon Valley companies doing the disruption in more cases than not.
Wow.
And so he goes on to itemize several different industries that are ripe for disruption, and you're not the ones that you always think of. With tech, healthcare's one of them. I mean, like manufacturing's one, the financial services industry, which we see a little bit here at the Fool, of course.
Yeah.
And so,
are they going to replace us with software? Is that what you're telling me?
I hope not. Do ourselves a job. So this is kind of his ideology, and he's very much a software, work smart, platform play kind of investor. And I thought it'd be interesting just to profile a couple of the most recent investments that Andreessen Horowitz has made.
Yeah.
So obviously they make a lot of small bets, and you can't read too much into any single one. But I think again, this track record will illustrate what he's interested in. So January 2016, the firm led an 8.1 million Series A round in Everlaw, which is a legal technology company. And basically, it is this cloud service that law firms can use. It's for document storage, search, and accessibility, just making the discovery phase of the legal process much easier, much less onerous.
That's not a lot of money, by the way. You're talking about making lots of small bets, and not to begrudge $8 million.
Right. But in the grand scheme of what they have under management, right. More recently in March, the firm led a round for Branch.co, which is a digital financial services firm, and basically they are taking mobile tech and bringing it to sub-Saharan Africa and helping people that would not have access to like credit ratings or credit worthiness be able to take out loans. And so instead of saying, all right, well, this is your credit history and this is what you qualify for, they're using other data points to build up someone's credit history and their credit worthiness. And so this is a firm that is helping people that probably otherwise would go unbanked have access to credit and loans and be able to facilitate some of that stuff. And most recently, Andreessen Horowitz, they led a round for SkySafe, which is a startup that is developing drone disabling systems. And so
that sounds like a great idea right now.
Right? And so the idea here is, if drones go rogue or if people are being nefarious with drones.
You could just sell it to FedEx and UPS and they could use it on the Amazon drones that are totally coming.
Right. Yeah. Yeah. So the thought here is if drones are where people don't want them to be.
Right.
They are going to be using sort of radio wave technology to override the drone's remote and take control of the aircraft and usher it out into an area that it should be.
Get it out to sea.
Yeah. And so what you see with all of these types of investments is they're software plays, they are scalable, and they are working smarter, right?
Yeah.
A lot of people are very big on drones, and rightfully so. I mean, it's something that is poised to explode in a lot of ways. But he is not interested in the hardware side of drones.
Right. He's interested in the software because anybody can make the hardware.
Right. And I think Andreessen Horowitz has invested in Jawbone, the wearable manufacturer. Mm-hmm. But even that as a hardware play is still kind of a platform play because you have the health tracking and like the nudges and on the tracking side. So you're not seeing a lot of hardware stuff here. It's all stuff that's software.
Right. Cool. All right. Well, before we dive into talking about Peter Thiel, I wanted to point any listeners out there that are hungry for more foolish content to focus.fool.com, where all industry-focused listeners have access to a special discount on the Motley Fool Stock Advisor newsletter. The discount works out to $129 for a full 2-year subscription. Once again, the website is focus.fool.com. So Dylan, thanks for sharing about Marc Andreessen. My guy, when you were talking, I couldn't help but notice the scores of similarities between Marc and the gentleman that I wanted to talk about, which is Peter Thiel. Mm-hmm. Not only does Peter Thiel have a net worth of $1.5 billion, but he's also a U.S.-ranked chess grandmaster.
Wow.
So do not play him in chess.
Sharp guy.
Yeah, well, no, not only that, but it was really weird. Our listeners, I highly recommend you, one, get his book 0 to 1, which I'm going to discuss in a second, but also just go to YouTube and type in Peter Thiel. There's lots of great videos about him, talking about business and startups and all that stuff. There's also this really funny video of him walking around New York with Garry Kasparov, the chess grandmaster from the 90s, and he's the Russian. He's just ringing any bell. Anyway, he's walking around New York just talking about politics and technology and stuff with Garry Kasparov walking around New York visiting chess clubs.
That's pretty cool.
It's really, really cool.
Are they doing it as ringers, or are they doing it like were these guys that are very good at chess?
Yes.
Okay.
Yeah, and they were talking to it highly recommend you check it out. Yeah. I think it's called, the title of it is a weird title, but it's like Into the Night with Gary Kasparov and Peter Thiel, and they're just going around talking about life and stuff, but they're visiting these chess clubs in New York. Anyway, so Peter Thiel was born in West Germany in 1967. He found his way to the United States. I think they moved here when he was like 1. But he attended Stanford University studying philosophy, and he received his JD from Stanford Law in 1992.
Wow.
So he's got a philosophy degree. He's a lawyer. He's a chess grandmaster.
And I'm guessing you're going to get to his tech credentials at some point.
It gets even better from what I just said. Because obviously, if I just described this individual, you'd be like, wow, he's a really sharp guy, lawyer, all this stuff or whatever. He is a co-founder of PayPal. Mm-hmm. He's one of the PayPal mafia. He's part of the mafia. In fact, I found this great photo I meant to show you before we went on air. It's all of them like playing poker, and there's like scotch and stuff or whatever. And he's in the middle of the photo of the PayPal mafia. Yeah. So I'll show it to you later. Anyway. Knew Elon Musk from the PayPal days. In fact, I read this story one time where after they got the payday from selling PayPal, Musk bought this race car, and Thiel was driving with him, and Musk wrecked it. And
he's like, you know what? I'm going to build a better one.
Yeah, I'm going to build a better race car, and he did. He has since, selling PayPal and, he probably netted a couple $100 million from that. Extraordinarily successful career starting investing in tech companies, the most prominent of which was Facebook.
Oh, yeah. Early investor, right?
He was the first outside investor in Facebook, and this was actually detailed in the movie The Social Network.
So he was in it, like someone represented him in the show, someone depicted him?
Yeah. I don't think it was like, with his blessing or anything. In fact, if you watch The Social Network, the guy that plays him looks nothing like it.
Yeah.
Anyway.
He's just like generic VC guy.
Generic rich guy writing a check. Anyway, in addition to that, he currently the chairman and founder of Palantir, which is currently private, and I want to hold off on talking about them because it bears discussing in a great deal later. He's been an investor through his founders fund and a bunch of other companies, including Yelp, Big Think, Quora, LinkedIn. He won TechCrunch's Venture Capitalist of the Year award in 2013. He's currently one of 10 part-time partners in venture capital seed accelerator Y Combinator. I mean, he's in on everything. His philosophy, how he views business and everything, is put together in a book. I cannot recommend this book enough. And the reason I wanted to talk about Peter Thiel today was because I came to investing through just reading when I was like 15 years old, books about Warren Buffett. Mm-hmm. I remember specifically wandering in my local library in a suburb of Cleveland, saw this book, How to Pick Stocks Like Warren Buffett, and it's got this old guy on the cover, and you're like, what the heck's going on? And first thing I learned was stay away from tech.
Yeah.
At all costs.
Very different ideology than what Peter Thiel is interested in.
Stay away from tech at all costs. Just do not do it. It's unpredictable, da-da-da-da-da. As you age, though, you start to notice that that's not quite right. Mm. And I couldn't put into words why I got that inkling. I didn't really buy any tech shares or whatever, but the value of what technology does and how you can invest in it successfully is perfectly enunciated by Peter Thiel in this book, 0 to 1.
So what are some of the main points?
Right. So 0 to 1, the book, is actually a compilation of what he taught in a Stanford entrepreneur class.
Oh, really?
Yeah, like this was a class.
So he also is an adjunct professor?
Yes.
Or which entrepreneur in residence or something like that? Yeah.
But basically the book 0 to 1 is about how a business like Coca-Cola, like Buffett invested them and made $10 billion in it, invested in the late 80s and everything. It does not push our civilization and society forward. Mm-hmm. Makes lots of money, gobs of cash flow, does not push things forward. A business like Microsoft, which has made billions of humans on this planet more productive with word processing and Excel alone, helps our species and civilization move forward. And 0 to 1 is where that comes from. Nothing to something.
Oh.
And he looks for businesses that do that, and in so doing create monopolies. He's all about monopolies, and he thinks competition is dumb. So any business that he invests in, and he cites Google as a prime example of this, is going to build a monopoly around being so disruptive and so good at what they do that they're not an evil monopoly where the government just protects them and it's just like this evil thing or whatever. They have a monopoly by being so good that nobody else can possibly compete with them. And a prime example is Google.
Yeah, so businesses with extremely strong moats.
Right.
Competitive moats.
Yeah. And really quick, just before we wrap up, I wanted to highlight one more combination there. He is all about software as well. The Palantir company that I cited.
Is that what he's currently interested in right now?
Yes. Yeah. He's invested in that OpenAI thing that Elon Musk is into about, making sure that AI doesn't kill all of us like in Terminator. Palantir is basically the merging of humans and AI. So basically, they look for defense threats against IT infrastructure in the United States, and the United States Department of Defense is the major customer. Basically, they created software that identifies potential threats, and it whittles down all potential threats down to, I'm making this up, but a couple hundred potential threats, and then a human analyst at Palantir's headquarters whittles it down from there, because it's that last 1% of potential threats that a human kind of needs to get a feel for.
So it's kind of like guided analytics?
Yes, yeah. He does not think that AI... He thinks the future is very software-based, and it's not going to be about humans or humans being replaced by software, but how we're going to work with it and become more effective working with it.
And again, I mean, obviously, the defense industry is something that has always made use of technology,
right,
but it's not where maybe technology's best and brightest have focused.
Right.
And, this is just another example of that mindset changing quite a bit.
Right. And he's already made $1 billion out of this thing. So, yeah. Awesome. Cool. All right. We're out of time, but Dylan, any final thoughts before we head out?
Yeah, actually, one thing I really like about Andreessen Horowitz, the firm, is their site, a16z.com. They have a lot of information and resources available for the average Joe.
Yeah.
So they do regular podcasts. They'll feature talks that Marc or Ben, the namesakes, do. And so just in addition to following them in the news or just like seeing how their firm operates with companies they've seeded, and then once they've gone public, how do they handle that? That's an interesting resource and just another great place to check out.
Yeah, I know what I'm doing after this. Cool.
Yeah.
Thanks.
And also, our writer, Sam Matera, interviewed Peter Thiel, I think, last year. And so we have a couple articles that came from that. And so if listeners are interested in getting any of those articles, we can get a bunch of links together.
Yeah. And actually on that note, if you want those articles or just want to give us a shout out, feel free to hit us up at industryfocus@fool.com. Once again, that is industryfocus@fool.com. And as always, people in this program may have interest in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks. So don't buy or sell anything based solely on what you hear on this program. For Dylan Lewis, I am Sean O'Reilly. Thanks for listening, and Fool on.